We are seeing the NSE 20 falling back for the fourth consecutive trading day. What are your views on what is actually playing out on the bourse right now?
I think by and large it should more or less be related to profit taking. We saw the market picking up, but it looks like the rally wasn't going to be sustained for long. Especially bearing in mind that the factors that were constraining, better share performance last year are still at play. So it was basically a very short-term, a very short-lived rally. And I think moving forward, it will all depend on new information that comes to the market, especially as far as performance of the economy is concerned.
Now, looking at some of the results that were out, we had TPS Serena posted a 23% jump in pre-tax profit to 853 million shillings. It issued a dividend of 1 shilling and 30 cents. Like most of the companies that have already reported results, what did you make of TPS Serena's results?
TPS Serena's results were actually quite impressive, especially if you look at the environment that was prevailing last year. That was basically a bit harsh. But I think on their side, they were basically pushed up by two factors. One, I think, was their strategy of expanding, which I think is really paying off quite well. And second, of course, they were favored by the weak shilling. Tourists preferring to come to Kenya because it was a cheaper destination relative to other countries. So by and large, I think they were favored by the environment, but also bearing in mind that costs were actually on the up, given the high inflation environment that was there. It was actually quite impressive that they were able to turn such results.
Now, looking at the tourism sector in Kenya, we saw that Kenya earned about 98 billion shillings from tourism last year, up from 74 billion shillings in 2010. But it does expect a flat performance to continue for the rest of the year. What kind of scenario do you see playing out given these factors for TPS Serena going forward?
I think Serena's market is more or less quite different from your average tourist. Their target is basically the high-end tourists, and I think looking at the factors that are at play, regardless of the difficulties in global markets, especially the Eurozone area, these are people I think who ordinarily would not really feel the heat as far as tough economic times are concerned. And I think as long as the situation remains as is, hoping that we don't have any political uncertainty or any unfortunate events, we should continue seeing tourism numbers going up, and more so Serena's numbers are likely to continue looking up in terms of their core clientele, so to speak.
Now, moving away from the stocks, we did see the energy regulator lifting the cost of petrol and kerosene for the first time since November yesterday. It also warns that it may raise prices going forward. That warning really not boding well for the interest rate environment in the country.
Exactly, and I think if you look at the factors currently at play, it probably points out to there's a bit of a there's a bit of a mixed signal in terms of how fast or how soon inflation will continue dropping. If you look at the trends that have been prevailing, and more so the recent announcement of an increase in fuel prices, and then if you factor in as well that some foodstuffs have actually been going up, especially milk and bread and so on, it's not very likely that you're likely to see a very sharp drop in inflation moving forward, presenting a case for CBK to start easing on monetary policy. So I think the only major factor that is going to determine what goes on moving forward is a long rain season that is expected to start from next week perhaps, all the way up to May, June. Now, if that is sufficient and there's adequate production in terms of food, in terms of dam levels having sufficient water, then perhaps they might, even if they raise prices, we should see inflation coming down, and perhaps in the second half, the central bank might probably start easing. But as things stand right now, there's still a lot of uncertainty, and perhaps there might be a possibility that easing might take a while.
Now, looking at interest rates, a lot of uncertainty on that front. We also had Parliament moving their war against banks a notch higher yesterday with a firm promise that an amendment seeking to regulate interest rates will be introduced into law. It hasn't been passed yet, but what kind of impact do you see that having on the Kenyan economy?
Well, it's a very interesting debate, I think, and I think there might be some confusion regarding what Parliament is seeking to do. They're not really seeking to control lending rates per se. They're mainly seeking to cap the lending spread in terms of how much banks can pay, and I mean how much they can charge on lending and how much they can pay depositors. And if you look at the formula based on the current CBR, because what they're effectively doing is giving the CBK teeth in terms of ability to influence the direction of lending rates, something they've actually been very frustrated about in the past. So if you look at the current, where CBR is 18%, it basically works out to a spread of about 9.3% using the formula that Parliament is proposing. And if you look at most spreads of banks, they're basically in that territory, between 9% to around 11%. So in our view, I don't think the world will come to an end. I don't think the economy will crash because of lending rate caps. In fact, this is something that actually takes place in developed economies. And I think it's about time also that we had some semblance of effectiveness in terms of monetary policy. You've had a situation in the past where CBK would raise the CBR and banks would basically just sit back and say, yeah, CBR has gone up, but we have costs to take care of, we have other factors to factor in, risk factors and so on. So this will actually give CBK some teeth in terms of actually being able to influence the spread, which is something I think that has been frustrating them for a long time. And I think, but of course on the other side you have a lot of apprehension from executive based on influence or pressure from IMF. So there is a possibility that even if Parliament were to pass the law, then the president might probably refuse to sign it. So it remains to be seen what is, what's going to happen moving forward.